Hello, I'm Paul Hefner, and today I'm going to be doing a video on how to create a 13-week cash forecast. We're right in the middle of the coronavirus pandemic, and a lot of people are talking about or worried about cash and worrying about different things. And so I wanted to go through a few things on how to actually create a template to sort of see what your cash forecast is going to be. So we'll cover that. We'll use the profit loss and balance sheet to do that. We'll also create a customer forecast, sort of getting into some of the drivers behind it. I'll just pick one sort of area, and then we'll also look at the accounts receivable forecast, which is a big determinant on cash. A lot of times you might have outstanding accounts receivable, and if you can collect earlier, or different things like that. And that's one of the drivers of getting more cash. So along the way, we'll be doing some Excel and QuickBooks tips, just on sort of things that might help you, which is sort of useful. So let's get into QuickBooks. So the first thing actually in QuickBooks is making sure that your balance is balanced. And I'm actually going to be doing Finance Pals, our business accounts, so I don't want to share too much customer stuff. But anyway, so the first thing is to check that your bank balance is matching your QuickBooks balance, and same with the credit card. If you're having issues getting either of those to match, that's something you can ask an accountant or somebody to help out with, or you can go through your statements and figure it out. Let's go reports. We're gonna pull these 4 reports. First one, we're gonna pull profit and loss. And what's interesting is, if you wanted to do a really basic cash flow statement, which you could do, let's do it for all of 2020. Let's go through the 22nd. Do it 2 weeks. If you ran this on a cash basis, oops. This is somewhat of a cash flow statement. It doesn't have stuff that might be on the balance sheet or other things like that, but this gets you pretty close. And sort of when certain customers are paying. You can see if I just look at March, more of the customers are sort of paying the beginning of the month when sort of invoices go out, and then sort of the last few weeks you're not getting as much. And you can see things like contractors and payroll are sort of going on. So like this month or this week, the third week of the month, is usually not a very good week, so we don't get a lot of cash coming in, and we have a lot of cash going out for salary and contractors and things like that. But so this is if you wanted just a real quick cash forecast, weekly cash forecast, you could start from this and just build it out. That would get you part of the way. We're going to sort of take it a step further though, just so you can sort of see how it sort of all works with the balance sheet and other things like that. So we're going to run this on an accrual basis. We're going to export this. Let's make sure that sometimes these files are corrupt, so I want to make sure they open before I move on. If you ever get that thing saying it's a corrupt file, which I would bet we might get one, we're doing this, then you can just run it, export it again. So next we'll do the balance sheet by week as well. Change this to show up by weeks, and we'll do it accrual, so we're all good there. And we will export it. And so these are the 2 files we're going to use to do the sort of 13-week template. Before we do that though, let's go ahead and pull the other 2 reports. So if we go, let's do the AR detail first. We could also do AP and other things like that. It's basically the same thing, but if I show you AR, I figure you can do AP on your own. Let's see, so we'll export this. And this is a snapshot, sort of where we are right now. The last one is this, sales by customer detail. And we're actually going to run this. Let's see. running for all 2020 so far. This shows all of our customers and sort of their services and things like that. And we'll use this to create our customer forecast. And we'll probably do that last, although it's one of the most useful things that you can do in a forecast. Okay, so now we've got all, let me make sure they all open actually. Okay, we've got all of our files open. Okay. So let's get into the balance sheet here. We'll use this as sort of our main file. So this is where we'll create our forecast. So the most important part of the cash forecast is starting with your cash. So let's pull in our weekly cash balance. So on the balance sheet, this would be your total bank accounts. And we'll pull in the date here as well. And we'll pull these across. This is our current week right here. I'm just gonna shade this yellow so I remember. Then we'll do the other weeks in a second. We'll get the sort of template going first, and we'll come back to. So next is, and if you do this and hit the little dollar sign, and we'll convert all the dollars. Next, we want to see the cash coming in. So we'll say income. And before I do that, I'm actually going to move because it's easier. If you right click on this down here and go to move or copy, then you can create a copy and move it to your balance sheet file. So it's all in the same file. This is going to be our summary. We'll just call it the 2-week forecast. Okay, so our income, and this is where you could separate it out. You could say, for us, we could do bookkeeping income, we could do other types of income. We're going to just do total income, but we could do bookkeeping or CFO or other things like that. Interesting. It started with the 12th. Let's see here. Maybe I pulled up the wrong dates. Okay, we'll just do it from the 12th. It doesn't really matter. Basically, what you want to do is you want to have at least a few weeks of sort of historicals, so we don't need to go all the way back to the beginning. That's fine. We're sort of on an improv here, and there's a lot of sort of shortcuts and things you may take along the way, but obviously if you were doing it yourself, you would go back and change it and get the correct dates. The next part of cash coming in would be sort of your change in AR, because basically, even though you might invoice, $10,000 at the beginning of the month, you're not going to get paid that $10,000 until the customer actually pays you. So this is the 12th through 18th. So this comes from the balance sheet here. So 12th through 18th, we'll do the change in accounts receivable. So we'll start with sort of the ending accounts receivable that month, and then this month, so you can see the, it's like some customer paid, $1,000 here roughly. So we'll see this coming in as cash coming in, it's $1,000. Let's see, I want to do the sign the other way. Yeah, the sign should be going the other way. I don't know what I did, but we'll try it again. Okay, and so this is our money. Okay, and now we'll do sort of our cash out. So usually payroll is the biggest one of these. We'll just sort of start on this week since. So our payroll for the 12th is going to come from this line. So ours is called salary employee, and then we could also have the payroll tax as well. So that's sort of our payroll cost. Like I said, we could separate it out, but we don't need to. Next line would be contractors, which is another big cost for us. And you can make these lines whatever you want them to be. I'm just sort of doing what ours are just for simplicity, and hopefully yours are similar. Then we'll have other COGS. I'm going to just subtract the lines above. Then we'll have operating expenses. Those are other operating expenses. Rent and other things like that would come in. We don't really have much rent. And then we'll have change in AP. So this include things like credit cards and things like that. So 12th to the 18th. Sorry, I think I did it backwards last time. So then we'll do our total liabilities. Okay, and then cash out. And then cash. So cash in minus our cash out. This would be our new bank balance. So our starting bank balance plus our cash goes there. Okay, so now we can carry this forward. I can tell there's already something on there, but I think that's okay. We'll let it play out here. Okay, we'll just go through there. Now let's see. Make these all dollars. Okay, so let's see how we did. So ending balance 7,000 up here. It's showing 13,000. So something is definitely off. Let's see if we can figure it out real quick. Okay, so I can already tell this is off here. Okay, just for simplicity. So essentially, what it's doing is it's subtracting. I don't know, it's looking for the next week of balance sheet stuff. So we'll just check it here. Why is that still showing? So nothing you can do if you want to lock these down. You go to view freeze panes. Some of this may be simple for somebody, but just trying to do things. So let's see what's going on here. Oh, I know why. So what it's doing is it's pulling the totals for the profit and loss and things like that. So we're off a week somehow. 19th, 22nd. Pulling column P. Somehow we got off on our weeks. Oh, it doesn't have doesn't start that next week. Okay. So let's do this here. Let's not worry about this week here. Come back to it in a second. Okay, so now, so the bank balance here is 12,000. Our ending balance is 6,000 here. So let's see what happened. Oh, I know. So just for the calculation, we might have some timing issues. So I'm going to just use our calculations the whole time. Okay, that's closer. Figure out what else we might have messed up. So there's a little bit of troubleshooting here. Let me just check this change in AP. So February 2nd, showing 2000. Oh, I know what I did. No, that's right. So this money in, this money out. So we're minus 5,000. Okay, and actually, so this is actually the ending bank balance on the 18th. We'll double counted something. So it's good to see some of these mistakes so you can help correct them. So this is our ending bank balance. These are all the charges that happened. And then next month or next week, we start here. Then we have this cash out. Okay, getting closer. Let's see if we can figure out anything else that looks off. There'll be small timing things, like sometimes our payroll, as an example, might get taken out a few days before, and then it won't get show up, they get taken out of the bank, but it won't show up in the transaction until a few days later. These should work out within the week because we usually pay it on a Friday. But like AR, things like that, we might get a vendor that pays like through QuickBooks or something like that, and QuickBooks will sort of show the money coming in, but it doesn't clear and show up in our bank till a few days later. So there might be some timing issues and some of these things. That's why it might be off week to week. Let's see if I see anything else that looks off. Yes, this makes sense. So we invoiced $15,000, but our AR increased, so that's a decrease in cash, and then so we had 3,000 out. So that looks right. Yeah, and we very much have this the weeks where we have payroll and things, our cash is down, and the weeks where we don't have payroll, our cash is up. Okay, well, we can keep investigating this. This is pretty close. How far are we? So we're 5% off. I know we can get that closer. I don't want to spend the video just troubleshooting this. So there's obviously some more work we can do on that, but basically this is the way you want to set it up. You want to know your bank balance, your income or your money coming in, your money going out, your change in cash, and your bank balance. And then, so what you can do from here, if you wanted just to do it, really simply, we can sort of take over our thing. So we'll, and throughout each month or each week, you will sort of correct different things. So we'll say this is our ending bank balance now. And then so just going forward, this will equal this. These formulas. I'll change our formulas around a little bit. So this will equal Q2 equal Q, well, it's really this one, R2. Okay. Then I'm going to do something this will help us out for the AR later during the weeks. So this would be 4/19/20. The ending date would be 4/25/20. Take this out. 13 weeks. Let's see, here we are. 12, so let's do. And we can take it out further if we wanted. So I'll just put it there. Highlight this and click right here and expand it. Now we've got our weeks. So this will be 7. Let's do a really simple forecast here. Actually, let's just correct it in a second. Okay, so let's go through. So let's do our income first. And I guess I'm still pulling from here. So let's say this would be our income sort of for the last week. To see how this carries forward. So sort of using what happened historically to sort of say it's going to repeat again. We'll do the same thing for so it's really the last week of the month here. Now let's check it and see what we need to update. So let's check our contractors. Our contractors and payroll are happening every 2 weeks. I'm not sure why there's this minus 56. Must have been some sort of credit. That probably won't keep happening. So we'll correct that there. This sort of says our same. We'll use sort of the same split out for how the yes, first of May we'll send out this many invoices. Some of it will go to AR. We'll get some cash coming in, then it'll keep flowing out. This is a little off here. We won't actually send out this invoice until the first of the month. So it'll actually be this week. And something else you can do, you don't have to, but you can create a different period just to say this would be 5/31, be this whole week, and then this next week would be the first start of the next month. But I like to just, for simplicity right now, we'll just keep it not doing any of those little stub periods. So I'm actually going to change this to here. I'll just delete these. Okay. Let's see if that goes through. Because now we're off on this one here, so it's late. So copy out. So we've got our sort of invoices going out at the beginning of the month, or beginning of each month, and then we've got sort of our same. We're just going to say it's going to follow the same AR. So here we can sort of see how our basically our payroll, that sort of, well, actually right here, we can see, we can do this too. You can do conditional formatting. Sales roles. So we'll say if it's less than 0, just to make it jump out of this. So we can see here, our forecast is that we're going to run out of cash at the end of June, early July, because here we're sending out this payroll or these different payrolls and contractors. Our cash is dropping, and then sorry, it's actually the week before. So this is the starting month. So we're going to run out the week before where we send out all of our payroll and contractors. Yeah, so wait, actually, maybe I'm off on how I set this up. 1 second. Yeah, so this is the start. Well, it sort of switches halfway through. But originally this was the ending bank balance, but now going forward, this is going to be the ending or starting. This is the ending. Before it was us sort of calculating, but yeah, so it's gonna run out actually down here. This is the week that we should have done the. So we can see that the week of last week in June is where we're looking at running out of cash. So now we can do other things to sort of refine this forecast. And we'll keep refining it, or what we could say is, hey, this is a problem. Looks like we're running out again at the end of July. So sort of at least finance pal's business, our business is the later in the month is where our cash gets the lowest, because we're not getting money from our invoicing and things like that. Okay, so let's go through the other two things that we can sort of do to update our forecast. The first thing is, let's do the AR, and we can plug it in here and do different things, but let's look at our AR. So let's see here. Let's do and I'm gonna actually, we were saying earlier, we're gonna use this for our AR. And this isn't going to be a super great forecast, but you get the idea of how you can use it. So that basically showing you how to set it up, and then you can play with it all you want. Okay, so let's just say typically what I would do is stuff that's more than 90 days old. There's some stuff here that we have in collections and other things like that. So we're going to skip over that. And then so I'm going to say, let's just make up some dates for these. Ultimately you would talk to each of these vendors and say, hey, when are you going to pay? And do different things, but we can sort of make up stuff. Let's just put a bunch of them as paying this week, and we can play with it later. This is basically just to show you how this works. Let's put this one by one. We're not actually going to really update the forecast. I just want to show you how the formulas work. Okay, actually, we can play with those other ones down there later. I'm going to do the same thing. I'm going to freeze the panes. So what we want to show is say, hey, this customer said we're going to pay this day, this one's this day, and we want to basically say how much money are we going to have coming in from AR. So we're going to write a formula if so we're going to say if it's greater than the state. So if this is less than or equal to the state, or if this one, let's see, 420, which one's be between the dates here? I think this. Or if And if 425 is greater than equal to this date, then we want it to show this amount here. Otherwise, you want it to show 0. So here we're showing $500. We're going to change this formula around now. There's a way, if you hit F4 or function F4 on yours, you can lock down these cells. And essentially what we want to do is we want these to be dragged across, and we want these to be dragged down. So for the ones that we want to drag down, which is this green and this blue, we're going to hit it 3 times. So the green and blue, 1, 2, 3. 1, 2, 3. 2, 3. Then for the purple and red, I hit it twice. Function F4. 1, 2, and 2. Okay, so now we can drag this, hopefully, all the way across. You can do it, as long as you wanted. And so you can see here we've changed these dates. So this one's 5/1. So it's putting it in between these 2 weeks. This one here is 5/10. So it's putting it in between 5/10 and 5/16. And anyway, so you could play this out in different things. And so maybe, ultimately you could do this for accounts payable. You could say, hey, we're tight on cash. We're not going to pay anybody until, until May, or different things like that. But ultimately you would use this, and then, somewhere down at the bottom, I didn't even do it all, but you could do AR cash. That's right here. I didn't carry the formula all the way down, but so you would do it and say, okay, this is how much cash we're going to be having coming in each week from AR, and that would help you forecast that. And so, if this was true, then what we would do is we'd go back to our forecast and say, okay, we've got all this money that we're expecting to come in this month. Our change in AR, we're actually showing, based on last month that we had an increase in AR, but hey, we have all these vendors that are late, and we're expecting this to come up. So then we would, change this to, I don't, let's see, whatever it was, to 9, just put 9,000. So then it's going to say, okay, now we fixed that, AR issue or whatever. So now we're going to have, we've fixed our, ending bank balance. Today, maybe because I put it in the wrong. No, that's right. Oh, so how I did the formula is now it's carrying this 9,000 through, so that's not right. But anyway, you get the idea. You could change your forecast here based on what your AR is going to be. So maybe this one we want to keep. That's this minus 1382, which is sort of how we've been operating. But then we want to change this one to say, let's make it more reasonable. So we get 5,000. So we're just sort of messing around. So now our forecast is that we're not running out of cash. Okay, so anyway, that's how you can use AR to sort of forecast that. And to me, it's really good for forecasting, this sort of a few weeks out, what you think your AR is going to be. And then obviously you have some things, if we go back to here, we didn't do the revised date, but some of these aren't even due yet. So some of these that are due, maybe when they're due, they will, the revised date will be equal to that date. Maybe they'll pay on before the due date, and they won't end up in the late category. But all of these vendors, obviously, one of the biggest drivers of your cash is getting AR. So for all these people, we'll be sending out this is sort of about the time of the month where we normally send out reminders like, hey, your invoice is overdue. and that's a good way to sort of drive cash. And those payment terms, you know, if you're paying net 30, you know, you're tying up cash for a long time. If you're paying, you know, something closer like net 10 or net 15, then you'll get that cash sooner. And there's other ways. While I'm talking about AR, you can have people, you know, if people are paying you by check, you know, that's usually adds, you know, at least 3 days of sort of mail time where they're mailing it. So you can have them, you know, pay, you know, over the internet or things like that. I know we use the QuickBooks thing where you can pay through the bank where you don't get charged a credit card fee. So that's an option as well because you get paid 3 days earlier. There's lots of other things, but AR is a big category. Okay, so now I think the most interesting one, you know, so your payroll is pretty constant unless you're going to hire somebody or somebody leaves. Contractors, you know, we could play with that some. You know, that's a sort of in our mind a percentage of our revenues. Our contractors are doing some of our work, and we can play with all those things. But the really interesting one is sort of what our income is going to be. So let's look at that a little bit. So we created this sales by customer. And I'm actually going to do this on a monthly basis, just because it makes more sense that. Let's go back to the date here. We can just double click this bottom right and it'll drag it down for us. Now I'm going to create a quick pivot table. Okay. So I'm going to do months across the top. I want to do our customers. So our customers have their own tab, and then we want the product or service. We want to know, but we're just going to do bookkeeping, which is where most of our customers are, and they're more steady. So we're just going to forecast that one out. So product or service will be there, and we want to do our customers underneath that. And then we can look at the So when I look at this, actually, sorry, let's just do the summary here. So here's the this is let's do the same. This is the months. This is the dollars, and then we'll do dollar per. We'll do a quick count function here for all. Let's see. Well, let's just try this. So count for here. We're just counting the bookkeeping ones. Bookkeeping dollars. We're just going to do a reference to B3 to the cell right here. $1 per customer. Pretty consistent. Okay, so now what we can do, you know, sort of for us, and we used our April numbers to sort of forecast, you know, what we were going to do. We've actually had some spikes in different things, you know, so we can create a forecast here. Basically, our weekly forecast went through July. You know, for starters, let's just do. So it would be our customers times our price. So this is sort of saying we're going to do it. You know, no sort of changes. You know, so maybe, you know, based on our things, we can get, you know, we can obviously get really detailed into figuring out what our customers are going to be. We could look at our customers in our pipeline and how many we're converting and how many we're doing like that. And some of this is seasonal work. We have a lot of customers at the beginning of the year doing end of year stuff. But that being said, essentially what you want to do is this is the metric you want is, number of customers, the dollars per customer, and sort of what your rate's going to be. And then you can, play with it some, so maybe, we know that we have, one customer that's, about to sign up. Maybe we think we're gonna, there's one customer just because of COVID-19 or things like that. We think it's gonna, lose customers here, and then we think, by August maybe we'll have a bunch of stuff in the pipeline, and then it'll sort of be, ramping back up. And obviously you can spend a lot of time coming up with these numbers and sort of negotiating it, and ultimately, you would sort of have, something that's the pipeline and converted customers, and then lost customers, returned customers. You would, sort of list out what those customers are, and even further than that, maybe you would, for these months right here, you could look and say, okay, we converted, 2 new customers. We got 2 new customers. They were from Google. One was a referral, and we start tracking all those different things and say, hey, we think we're going to get two customers from Google, or we think we're going to get 1 customer from a referral, and we can start, building out, sort of all those things of what we're going to do, or we could build it up here in the pipeline, I guess, and start converting. But anyway, yeah, so then eventually what we do then is, okay, we've got a forecast we feel comfortable with. We think our bookkeeping revenue, which we didn't separate on the other one, then we could, we could say our CFO, or basically we could do like this, if you wanted to make it really simple. So our revenues are going to be up $451, as an example. So then we would go back over here, and for May, we could do, and then we would have to sort of then flow this all through to say, okay, how does this flow through AR? This would have to be a percentage of this. And also our contractors, if our contractors are doing the work, or if it was payroll, we could, flow that through. But ultimately, then you would keep refining your forecast. And then, like I said, I sort of did this wash move at the beginning where I had this variance and sort of just played it through. But I felt confident that the model was working reasonably well, which is what you want it to do. So then we would each month, each week we'd come through and say, okay, this is where we forecasted it to be, 12,505 is where we're forecasting it to, we're forecasting it to end this month at $20,000. So we're going to collect some of that AR money. Then we would say at the end of the week, we could do it, next Monday or something like that. Say, okay, did we really end at 20,000? Where did we miss? Okay, well, some of this AR didn't get collected. Now we're expecting it to come in this week. And so we would keep revising our forecast and sort of figure out, are there other things that we're missing? Is our income, if this is based on a certain number of customers, that we're going to write invoices for this month or this week, then we keep revising it. But basically, this is the nuts and bolts of what you want in your weekly cash forecast is ultimately to figure out your money coming in, your money coming out, and sort of what your ending bank balance is going to be. You could obviously build a super detailed pro forma. Usually pro formas are more at the monthly level, but you could keep building out your P&L and a bunch of other stuff and do that. But I like this format here to sort of say, this is where we're going to end each week, and you can start to forecast different things, different problem months. Even now that we're not forecasting around the cash, we still know that the end of the month is sort of our downfall, where our cash gets the lowest because we're paying out our payroll and contractors. And here we've gone a few weeks longer than the 13 weeks. But we can sort of see what this is, and then we'll have to try to change things between now and July, or even the end of June, I guess right here, where where our cash is getting tight, and maybe we'll have to really keep an eye on it. Let me think if there's anything else. So I think that's it for now. I'll go back to and figure out how to stop sharing. Sorry, move my computer in. But yeah, so that's basically how you create a 13-week cash forecast. If you guys have any questions, shoot me an email. And thanks for watching. And obviously, if you're running into those problems where you feel like you're going to be running out of cash, that's where we can help out as well. We can talk about some of those other levers. We talked about AR. We didn't talk about AP that much, but you can obviously pay, slow pay some of your vendors, or slow pay some other things to sort of free up some cash there. You can just overall work on that cash conversion cycle, between when your customers are paying you and when you're paying your vendors and things like that. You can take out some temporary lines of credit, things like that, get some money in. Lots of other drivers you can play with, but those are the most common. And ultimately, you can play with your income. You can increase your sales price as well, and do some other things like that. But anyway, the main point of this exercise is not to necessarily to solve those issues. It's to figure out where the problems are, just so you have an idea of, hey, this is when our cash is going to be tightest, and then you can start to think through what are the actions you want to take to make sure you don't run out of cash. So anyway, hope you enjoyed the video. Like I said, shoot me an email if you have any questions. Thanks. Have a great day.